It feels like things are going back to normal. People are going back to work, the stock market is soaring, and even movie theaters are opening back up. But in the background, the Federal Reserve Bank is secretly trying to figure out what to do because they're worried about what might be coming next in the economy. What's up, everybody? I am Jaspreet Singh from theMinorityMindset.com and welcome to The Minority Mindset. Do you know who's freaking out about the economy? Here's a hint. It's not Wall Street because the stock market has been booming, and it's not homeowners because real estate prices have been soaring. It's the Federal Reserve Bank. The Fed had a private meeting where they discussed what to do about the economy, and their meeting notes tell us that the Fed is still very worried about the economy, and they think that this pandemic and virus will continue to, quote, weigh heavily on our economy. This is nothing new. We know that the American economy is hurting because of this virus and this pandemic, and now people are starting to get worried because there are talks of a second lockdown starting to creep up again. And now there are some members of the Federal Reserve Bank who are even pushing for a strict 4 to 6 week lockdown to make the virus go away. But that's not all. It looks like the Fed is telling Congress to print more stimulus checks because the economy is hurting pretty bad. That's why in this video, I want to go over what's going on in the economy right now, what might be coming, and what you can do with your money and your investments. So make sure you watch this video until the end because you don't want to miss any of these key details. But before we get into that, hit that thumbs up button below, subscribe to the Minority Mindset YouTube channel, that way you don't miss any of our new financial news and education videos every single week, and hit that little notification bell too, because if you don't, well, then YouTube won't let you know when any of our new videos are released. The Federal Reserve Chairman Jerome Powell has been adamant about pushing for more stimulus checks. The government has been kind of flaky about stimulus checks because they just keep taking recesses every time they get into a disagreement, but the Fed is saying, government, Congress, stop playing games and pass some stimulus checks because Americans need them. Our economy is in a very weird state right now because we still have millions of Americans losing their jobs at an insane rate, but the unemployment program that was created because of this pandemic has expired. So that's when President Trump signed a new executive order which promised people who lost their jobs $300 or $400 a week in unemployment. But most Americans are not getting those unemployment benefits. To help combat this economic crisis, the Fed said that they are going to keep interest rates at or near 0% until the economy recovers and until employment recovers. In other words, unless the Fed changes their mind, you can expect low mortgage rates and low interest rates on your savings accounts for a long time. That's when things got a little bit more interesting because it turns out the Fed is concerned about our entire financial system crumbling. The Fed had a similar concern back during the 2008 crash. Back then it was because of the real estate market, now it's a little bit different, but during the 2008 crash, banks had lent out so much money to people so they could buy homes because people thought homes can't go down in value. So all these people were buying homes and banks kept lending out all this money, and then home prices crashed and people started defaulting on their homes, so people stopped paying money back to the banks. So banks had lent out all this money, but they weren't making any money back. So none of their money was going back to the banks, and that's when the financial system started to collapse because banks almost ran out of money, and that's when the government and the Fed came out and they started bailing out the banks. During the 2008 and 2009 crash, the United States saw the biggest government bailouts in American history. And then came 2020. In 2020, we've already seen much bigger bailouts and stimulus plans passed that make 2008 look like crumbs. But now, the Fed is worried about two things that could potentially cause a financial system collapse. One is a banking failure, and second is a government failure. Right now, according to the Fed, banks are in good shape and they're putting aside cash to protect themselves against future potential defaults. But the Fed is worried about what might be coming next. If this virus continues to spread and we don't see a vaccine for a while, that means people and businesses are gonna continue to suffer financially, and we don't have a way to measure how bad it could potentially get. If things do get worse in the economy, we already have millions of Americans who are in forbearance on their mortgages. We have millions of Americans who are behind on their rent and on their mortgages. And so if things do get worse economically, this could put a big strain on the financial system, and we've seen the kind of pains that can cause in the economy. The second issue is government debt. The United States now has about $27 trillion worth of national debt. Now, this is a really hard number for us to imagine because our brains are not wired for us to understand trillions of dollars and how big that is. So try to imagine it like this. Imagine if you spend $1 million a day and you spend this $1 million a day every single day, 7 days a week, and you spend $1 million a day every day for the next 2,000 years. So if you spend $1 million a day every day for the next 2,000 years, then you would still have only spent about 1/4 of our national debt. Now, to be fair, it's nothing new that people are worried about the national deficit. I mean, people were worried about the national deficit, and they were worried about the United States going bankrupt in the 1930s and the 1940s when FDR was president, when we only had like 10 or 20 or 30 billion dollars worth of national debt. What people are worried about now is how fast our debt is increasing relative to how fast our economy is growing. In the early 1940s, when our national deficit first became a major issue, Franklin D. Roosevelt was president, and at the time, our economy was growing by 16, 17, 18% a year. That was our GDP growth. In the 1950s and the 1960s, our economy wasn't growing as fast, but our GDP was still growing by 5 to 8% a year. I mean, up to the year 2000, we would still see our GDP grow by up to 5% a year. After the year 2000, our economy slowed down a bit and we were seeing like 1 to 3% growth in our GDP. The reason why this economic growth matters compared to our national debt is because you have to ask yourself, what is debt? Debt is when you borrow money from your future self, your future earnings, and you spend it today. So if you go out and you borrow $1 million, you're going out and you're saying, okay, I'm going to take $1 million from my future earnings, and then I'm going to spend this $1 million from my future earnings today, and in exchange, I'm going to pay my lender some interest. Hopefully, when you borrow that $1 million, you're going to have the minority mindset, and you're going to take this $1 million from your future earnings. That way you can make more money today by using your money to buy assets. That way you take this $1 million and you grow it into something much bigger. That way you can pay back this $1 million and its interest and have more money in your pocket. But now, if you go out and you borrow $1 million from your future earnings and you spend it today and your income goes down because you spent this money on something like cars and shoes and clothes, things that don't make you any money, now you're effectively becoming poorer because you're going to spend the next 30 years spending your income paying off liabilities which are not making you as much money. So America is borrowing tons of money. We are borrowing money faster than ever before. Like in 2020, we have increased our national deficit by almost like 15% in less than 1 year. But at the same time, what happens if our economy cannot grow fast enough to keep up with this rising national debt? America is taking trillions of dollars from its future earnings and spending it today so our economy doesn't collapse. But what happens if our economy doesn't continue to grow fast enough? In the 1970s and 80s and 90s, when the United States would go into a recession, the United States government would borrow money to help fund stimulus programs and help fuel the economy, and this would inflate our national debt. But that's when the Fed would come in and they would cut interest rates to help the economy grow faster. If the Fed cut interest rates from 10% down to 7%, this was great news because now if you're a business, you can go out and borrow money much cheaper than you could before. So now you have access to more capital that you can use to invest in your business and grow your business. And this could help the economy grow faster to offset this new national debt. So you'd go into a recession and then the United States national debt would go up. But then the Fed would cut interest rates to help the economy go up too, and this would offset this new national debt. In 2020, we are facing an interesting dilemma because now we are borrowing money faster than ever, and our economy isn't growing as fast as it used to, and our interest rates are already down all the way to 0%, so the Fed can't really cut interest rates much more to stimulate the economy and help the economy grow faster, unless we go negative with interest rates, but that's the topic for a different video. This is one of the reasons why gold and Bitcoin has been booming, because people are getting worried about the economy and the dollar, and so they're hoping that gold and Bitcoin can help protect their money and their wealth. Look, I have a lot of faith in our economy and our country. We've always pulled through, and I'm sure we will again, but how we move forward and grow as a country, as an economy in the future is going to be very interesting. When it comes to the stock market is disconnected from the economy, okay? We have a few tech stocks which are booming, which are helping the entire stock market go up. We have this new flood of new traders which are pouring money into the markets. And we have the Federal Reserve Bank, which has promised to print whatever amount of money necessary to help support the markets and keep them inflated. The thing that everybody, the government, the Fed, investors are keeping their eye on right now for the economy is what's happening with this virus. I don't know about you, but things kind of feel like they're going back to normal where I am, minus the mask. But every once in a while, we get slapped with another dose of reality. Like schools are shutting back down, which means people aren't doing any back to school shopping, because if you're going to school from home, you don't need a new backpack and new folders and binders. People still aren't traveling, which means the travel industry isn't making any money. And now with talks of lockdowns creeping back up, it's really hard to predict what's going to happen in our economy over the next 12 months. The best case scenario is we get a vaccine soon and this virus goes away and our economy can go back to normal and hopefully grow quickly. The worst case scenario is people continue to get sick and people don't want to go outside, and now our economy stays slow or our economy shuts down, and now we are in a deep financial mess. It's going to take years for our economy and our job losses to recover from the pain that we've already felt. And every day that this pandemic continues to go on and hurt our economy, the longer it's going to take for us to fully recover. These are the things that the Fed and the government are worried about and are trying to plan for. Now, while I cannot predict what's going to happen in the future, one thing that we can help you out with is staying up to date on what's happening in the finance and business world, because we created the free Minority Mindset newsletter where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money. This newsletter is completely free, and you can subscribe to our free finance and business newsletter by clicking the link up here or by clicking the link in the description below. By the way, our financial news emails are separate from our financial education emails. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about what you should be buying during this 2020 economic crisis to build wealth, I already made a video on this, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.